whole game is about setting up your personal finance foundation, savings, budgeting, payments, as you look towards these long-term major purchases like buying a house and setting yourself up for success.
Hello, everybody. I'm Ashoka Maimona. I'm the host of today's interview on behalf of Smarter Loans. Our guest today is Leslie Mwandawiro of MyMarble Financial. Hello, Leslie. How are you today?
Hi, Ashoka. Thank you for having me. I'm doing pretty good and excited to be here.
Yeah, our viewers are excited to have you. I'm excited to hear from you. My understanding of MyMarble is that the MyMarble team, you guys really are on a mission to use technology to improve the finances of Canadians and financial wellness of Canadians in Canada, which to me sounds quite fascinating. So let's jump right to it, because I'm sure that there are many insights that we'll pick up from you today. So let's start broadly, maybe in your own words. Tell us and our viewers, what is MyMarble Financial?
Absolutely. MyMarble Financial, as it stands today, is a financial technology company, which essentially means that we're using tech-enabled financial products, using data collected from customers' credit reports, banking information to essentially derive the most insightful and comprehensive recommendations on what they can do to tackle debt, improve their credit, and meet their financial goals.
Mm-hmm.
The company was started, I guess a bit of a backstory, it was started in 2016, primarily as a subprime lender. We provided loans to the underbanked. So these are Canadians that are not able to access prime rates when it comes to financing across all financing sectors. But we still face the perennial problem of high cost loans. There's no way of going around that. So the core issue was around financial literacy and proper financial planning. So Mike Marandino and Karim Nanji came on board in about 2019, 2018 with the aim of liberating credit restricted Canadians from high cost of lending and a negative financial future. So this became a reality in 2019 when we kind of reshaped the mission, focused on the financial technology aspect of who we are today. And that's what continues to drive the company forward. So today we utilize proprietary technology, that includes stuff like AI and machine learning algorithms to analyze credit reports, banking data, and, help Canadians take back their financial health.
I find that really fascinating. And in terms of aggregating that data, so you mentioned credit reports, bank statements. Are there any other sort of information sources that you rely on to assess a client's health, financial health?
When it comes to the client's financial health, it really comes down to those two basic facets. And that's what, one informs the other. Their credit reports informs what type of lending and products they get access to. So those are the core tenets, I would say, when it comes to personal finance. Looking at your credit report, which takes a long-term view of your credibility as an individual, how able are you to pay back loans? And, your status today is your banking information. What cards do you have on there? What are your habits with the accounts that you have? And how do you properly manage that? And when it comes to the management of both of those things, there's a ton of resources out there, articles, blog content, and we're just one of those vendors trying to pave the way.
And what about MyMarble? Can you tell us a little bit about that?
Yeah, so MyMarble is the platform that we host that has access to all of our services, all of our educational material, and, really all of the technology that I'm speaking about on this call. So essentially, all users, regardless of what they're applying for, need to open an account on MyMarble Financial and receive a MyMarble account. And on there, they get access to a dashboard. It has, different meters and numbers and ratings that we're pulling from the credit bureau and their banking information. And then from there, we're able to, assess what their goals are. Are they just looking to better manage their finances? Are they looking to make a long-term purchase like a house, to get a car? Because, oftentimes credit is a means to an end, but it does deserve its own specific management. And from then on, we simply structure their experience in this program as far as courses, services, and any general recommendations we make that pertain to that goal.
Okay, so walk me through, let's say, a prospective client stumbles upon your website and they're curious about your products. Do they sign up for a MyMarble account upon which they have access to all your products? Or how would a prospective client learn more about your offerings and sign up that way?
So we have a presence in social media. We carry out marketing on there. We are recently pursuing a business to business strategy that allows us to provide our software kind of at the source, which is where customers apply for loans and mortgages and other financing products. But as far as, the information that's available on our website, we understand that, not everyone has a perfect understanding of what personal finance is all about and what factors that comprises of. So I do find that our website has quite a bit of information about what we do, what the products are around. We have a lot of blog content that covers a lot of the materials and talking points that we share in the platform itself. So for a prospective customer, I would say just type it into Google, Marble Financial. We'll have a complete listing and description of our services, our goals, and what you can expect to get once you sign up. And even when you do sign up, we do provide a walkthrough of, for example, we start with your goal, and then we talk about how we're going to help you meet that goal. And again, provide a description of all the resources available on the platform to help you get there.
Excellent. And you mentioned MyMarble. So that's one of the product offerings that the Marble financial team offers.
So just to clarify, MyMarble is the platform where all new users log in that contains all of the products that we have. So you can think of it as an account that you open that hosts all of the different recommendations and products that we have.
Excellent. So Fast Track, for example, is a product offering within the MyMarble platform.
Exactly. So essentially you need to open an account in order to apply for the Fast Track program or apply for the Score Up program as well, which we can dive into.
So let's do that. Let's talk about these different product offerings. I mean, we can start with Fast Track or Score Up or whichever one you feel our viewers will benefit from.
So from a flow perspective, once you sign up, you get what's called a freemium account. And that's just a free monthly account, which will provide you with updates to your credit score. It'll provide you with high level general recommendations based on what information we're picking up. Do you have a high credit utilization ratio, which means that you need to pay off accounts or balances on accounts that you have? Or do you have too many inquiries or you're applying to too many loans at one time and you need to just kind of slow down and focus on building your personal finance and then going at it again? So there'll be starter level recommendations, and also included in the freemium is access to our Marble Maestro. So these are courses professionally made with videos and quizzes at the end that again focus on, credit building, how to read a credit report, what are the things that you need to look out for, how do you file for dispute, practices, healthy practices in saving and personal finance in general. And then on the dashboard, again, based on the goal that you've defined and your current credit standing and banking situation, you'll find a list of recommended products that kind of fall within our suite of financial help products. What we lead with, I would say, is our credit building program. So we try to not focus on debt financing as a way to improve credit. What that means is we'll try to not provide, because we fall into the same problem of high interest loans. So we'll try to not lend money to customers and instead focus on the basic principles of how to improve personal finance. So on the Score Up program, essentially what we do is, again, we focus on the banking data that we've collected, the credit information that we've collected. And we have, again, when I talked about our proprietary technology, which sounds super fancy, but it's just the development and time we've taken to create algorithms, AI technology that's essentially able to pick up important pieces of information about your credit and tell you really simply, what do you need to do each month to improve your credit score? What that looks like, for example, is if you have, several credit cards or loans, it'll ask you what's your monthly budget when it comes to spending, paying off debt and improving your credit score. And it allows you to set a budget between $0 and $5,000. Depending on the budget that you set, it tells you what the best use of those funds are. So it kind of sets things on auto drive for you. And just by taking these recommendations, you can accelerate the rate at which you improve your credit score and improve your financial situation. And then once we look at the Fast Track program, when you get into a consumer proposal, which is essentially kind of like a bankruptcy, but not quite, you get barred from any kind of borrowing. So in many cases, you need to pay that off before you can access a mortgage or any kind of financing. So what we do is, and as I know right now, we're pretty much the only company that pays it off. We'll take that loan from the customer, we'll pay it off directly with the trustee, and then from that point onwards, open up a trade line, which essentially means it's a loan that you'll have to pay back to us, typically at a lower interest rate than you would get any other kind of loan if you can. And it's an open loan, which means you can pay it off. If you get it today, you can pay it off tomorrow. And as you're paying it off, you get to build your credit score and gain access to any other kind of financing that you need. But, typically at this point, it's not recommended that you apply for any other products. So typically the fast track program and the score up program go hand in hand. You pay off your consumer proposal, and then you learn about the best practices through the AI on score up, which tells you exactly what steps to follow to get to whatever goal that you've set. In addition to this, we also have a GIC loan, which is essentially a loan that you pay off over 2, 3, 4 years. And at the end of the loan, you get most of that money back as savings. But in the meantime, you are able to build out your credit score. That might sound, confusing and redundant, but, for Canadians that cannot access any kind of loans and that want to build their credit scores, this is an excellent way to get something that is under or cheaper than what's available in the market, while still being able to build your credit score while making low minimum payments, and at the end of the program, receiving a huge boost in your credit score. So those are the programs that we have mainly today: the education, the courses, score up, fast track, GIC loans. And we're always looking for new and innovative products to integrate that can help accelerate that process and elevate financial health.
No, that's amazing. That is, that's a whole suite of products that I think many of our viewers would benefit from. Now, before I touch on the mission, financial inclusion and digital literacy for all, some of the missions that the MyMarble team holds dear to their heart, I think it might be helpful for you to paint a picture of the landscape for our viewers, because the stats are quite staggering, to be honest. I was poking around on your website, and one of the stats that jumped out to me was 78% of adults live paycheck to paycheck. I don't know if that's a North American statistic or a Canadian one or a US one, but I find that quite staggering. So if you could speak to perhaps how as a country we've been faring when it comes to financial wellness. I know a lot has been written on this topic, but from your perspective.
I guess I'll start from a personal level. After, having come into the country for university, after university, the first company I worked for was a not-for-profit, which focused on financial and business education in high schools across BC. So from then on, I kind of saw the problem as institutional, as something that needs to start from the educational curriculum, which is something that we don't really get that much access to growing up. So let's start there. And then as we kind of look at the state of things today, as you said, the stats are pretty mind-blowing. And right now, the interesting thing is we have a good idea of what things look like pre-pandemic. I guess to kind of describe that picture, we can reel off some of the stats here. The household debt was at 177% of disposable income pre-pandemic. Nearly 3 out of 4 Canadians have some kind of outstanding debt or used a payday loan in the past 12 months in the year before the pandemic started. We're seeing mortgages as the largest kind of debt that Canadians incur, and that makes sense. So it's best that we prepare as best as we can before we make that life-changing decision. It literally is. Some other interesting statistics are that around 41% of Canadians surveyed in 2020 took out some kind of loan to buy a car. 35% of Generation Z Canadians plan to get a loan in 2021. And it's really this emerging kind of generation of young adults that's facing ballooning prices and economic kind of crises need to plan accordingly. 13% of Canadians get personal loans to pay off their credit cards each year. More than 3 million Canadians have some kind of home equity lines of credit. In 2019, 73% of Canadians had some type of outstanding debt, which is ridiculous. Mm-hmm. And, with the pandemic in place right now, a lot of people have been laid off. A lot of people have had to resort to options and lending and financing and rates that they wouldn't agree to beforehand. So what we do know is that, there's going to be a resurgence of personal finance, I guess, problems and situations that Canadians will face as we exit the pandemic. And it's really about positioning yourself in a place of success in order to capitalize and, avoid financial ruin that could really set you back years and years behind. So right now, a lot of Canadians are taking out a lot of debt. There's an education problem and a personal finance awareness problem that needs to be tackled. And really the only way to institute that is to focus on the best practices, the education aspect. And through that, you really are setting yourself up for success in the future.
Those are definitely mind-blowing statistics. And it's interesting because when I was talking to one of your colleagues a couple of years ago, this was pre-pandemic, Rich Elliott, we were talking about some of these issues. And I can only imagine how they have probably multifold, over the course of the last 20 months. Because my understanding, I think we were, unfortunately, world leaders when it came to household debt. So I think we Canadians had the highest per capita of household debt in the world. And I can only imagine that's increased as well.
Just to quickly add on to that, we don't really know the full impact of the pandemic. We'll only see once, things settle down. So, it's a situation where we're kind of preparing for the worst, hoping for the best, and doing all that we can.
Exactly. I have a couple of questions on that, but first let's focus on, things settling down and people sort of, coming out of the ashes and realizing, perhaps the gravity of the situation. And let's start with household debt. So at the individual level, how can Marble help many of these Canadians who are struggling or will be struggling in the near term?
It starts with the education. No one's going to be in a perfect situation right now or past pandemic. And it's a matter of assessing where you are at the moment financially. And the only way to do that is to have access to relevant information. So it's about looking at, what debts that you have outstanding. What's the best way to manage the existing debt that you have without accumulating more debt, and finding resources that can help you along this journey, because it is a journey. It is a practice that you have to conduct on a continuous basis. There's tons of resources out there. One of the ways that families, households can start working on this today, of course, Marble Financial is a resource out there. For no cost per month, they can keep track of their credit scores, which is a primary tool when it comes to lending or mortgages or any kind of financing that the person wants to apply for. So it starts from assessing the credit report, monitoring the score, implementing healthy practices, checking out things like the utilization ratio. If there's a way to consolidate debt that they already have, that might be a good play. And, you might want to move existing debt you have from a high interest, high cost situation to consolidating it, even if the debt is larger, to a low interest rate type of financing arrangement. And then, managing your payments to the point where you can borrow more money at a better financial situation, because interest rates are the real killer. And if you have kids, you want to start them off early as far as the education is concerned, and set them up for success.
Mm-hmm. You mentioned education, and this probably is part of the answer to this, but why do you think there is a financial wellness problem in Canada? Why are so many Canadians struggling, with managing their personal finances? And I mean, in your response, feel free to tie in Marble's mission and what it stands for.
I don't have the specifics of, the economic situation that we find ourselves in today and what those prospects look like moving forward. I know the housing situation in Canada is, an issue that we're trying to resolve. But when it comes down to it, the problem, like I mentioned, starts with proper education as you're growing up. What are the best practices when it comes to personal money management? How do we forego current pleasures and gratification for future benefits? And, that type of mindset where we can nurture and implement practices, ideas, and habits around money that really set you up for future success. So it starts at the education level. And I think one thing I wanted to touch on is one of our goals, of course, it is to improve the financial well-being of Canadians. We want to start reaching out to businesses that are providing these types of loans, providing car loans, mortgages, what have you. and enable them to have access to our platform to provide those users with the essentials that they need to keep in mind as they move forward with, their financial ambitions, to make sure that the basic facets of their financial health, and that includes credit, a big portion is your income and how much you're able to make. But again, I think proper financial habits are important for more than just personal finance reasons. It's a part of overall organization. So one of the things that we want to focus on the business to business side is reaching out to businesses that provide these kinds of financing, allowing their customers access to our platform and guiding them and showing them. It is an awareness issue as well. So we need to reach out and let Canadians know that there are resources available to them, and they are able to reach their financial goals with proper planning.
Fantastic. Let's talk a little bit about financial literacy, because we touched on education. This is obviously one of the many missions of the Marble team, because I think that's the premise of Maestro, is to really educate your clientele and your customers. Why would you say that's important? Why do you think, and I guess this is in part another mission that sort of ties into your overall goals at the company, is digital financial inclusion, is, I believe, what Rich Elliott had sort of described it as. Why do you think that's important?
I think it's important because we make uninformed decisions. We make uninformed decisions when it comes to borrowing, it comes to our credit, and without being aware of the implications of the actions that we take, it becomes a slippery slope downwards. And, having worked in the customer service and sales side of things, a lot of the customers that I spoke to that are in consumer proposals or are in a tough financial situation, it purely comes down to not knowing the implications of the actions that they're going to take and what the best practice is. So when it comes to digital financial inclusion, we're seeing that with, the explosion of the internet and the amount of services that people get exposed to, you're being offered loans left and right. It is easy to look at that and find that as a solution, but without being entirely informed of what factors are important, such as your own financial situation, the interest rates involved, and really having that mindset switch from, let me delay this purchase or this thing that I want to do right now and focus on the foundations of, my personal finance situation, which could, set me up for success in the future. Let me not get this high interest loan right now because it's going to be a lot of monthly payments that I need to make. I need to consider what my monthly income is and whether this fits into a budget that I can afford. I need to examine all other aspects of my life. What are my entertainment, basic and need expenses? And how does this all factor into my 1-year goal, my 5-year goal, and my 10-year goal?
Great. I know you have many, many practical tips to share with our viewers, but I think before we move into that part of our chat, I just wanted to ask you, you had mentioned the term underbanked earlier, and you had briefly gone over it, but if you wanted to just sort of elaborate what it means and what are the implications of being, characterized as underbanked.
The underbanked sector is characterized as those Canadians or the percentage of the population that does not have access to prime financing. So you can't walk into the CIBC or RBC or any of these top institutions to get a loan, to get a mortgage, or to find some kind of financial relief. And that forces you to look into the private market, subprime lenders. And there's no shortage of those types of lenders. So it's important that we kind of realize that distinction, understand what our initial kind of financial practices. You get out of university or early on, you try and get yourself out a credit card. If that doesn't go really well, then, through borrowing more than you can manage or take on or pay off, you find yourself in this underserved market, having to take high interest loans. And, over time, that only reflects on your credit score. And even if in a 10-year period in the last few years, you're able to turn your financial situation around, there's still decades worth of reporting and history that does not reflect positively. So when it comes to the underbanked, underserved, it's about providing solutions to those Canadians that don't have access to livable, practical, and the best kind of financial rates available in the markets.
Perfect. Now, in terms of credit. This is a term that I think a lot of people hear and perhaps don't really understand what it means. What is a credit score? Why does my landlord need it? Why perhaps do banks need it when assessing my financial health? And truth be told, going to school in the 90s, there was no financial literacy course. Even attending university, these aren't topics that were widely disseminated. I had to educate myself. So to viewers who aren't aware of what it means to have a good credit score, if you could just give an overview of why it's important to have a good credit score.
Yeah, so if you put yourself in the position of a bank or a mortgage lender or anyone that really, even your friend that wants to lend you money, I think it's important that, maybe not your friend, but if you need to provide money to a stranger, you need to have a record of how credible they are in terms of paying off their debts. What does their history look like? Are they falling behind in payments? Are they not meeting their phone bills, which is oddly reported on the credit report, but if you do pay it in time, it doesn't actually add to your credit score. And generally, your repayment and borrowing history across time. These are important factors that determine what you do get access to. So the credit score is essentially a number that takes in different factors, such as your utilization ratio, which I touched on before, which is essentially the percentage of available credit. So if you have 3 credit cards worth $2,000 each, the percentage of the $6,000 of available credit that you have that is used up at any point in time, that usually needs to be under 35% of utilization. That's a big factor that is taken into account. Missed payments and missed bills, that's another factor that's taken into account. So in Canada today, we have Equifax and TransUnion. Those are the 2 credit bureaus. And essentially what they do is they are the collector, compiler, and disseminator of each Canadian's credit score and financial history. So it is important that, you know that the credit report does exist. I think many people do know that a credit score does exist out there. Understand where you can track your credit score. Have a look at your credit history. We see a lot of customers that open up an account with us and can't recall or place specific items that they see there. You go to a store, for example, they provide you with an in-store credit card. You take it up because you don't really know what the implications are. And, you get discounts for products that you buy. You use up the card, and let's say you run into a bit of debt or you leave it at maxed out capacity. You forget about it. A couple of years down the line, it shows up in your credit report and it's a blemish. So those are the factors involved. And it's crucial that you have a pulse on your credit score and how it changes over time.
Exactly. And I know that one of the things that you've spoken about is that MyMarble helps customers improve their credit score. Since we have you here, we'd love to hear some of your tips of how our viewers can improve their credit scores.
One of the really cool conversations I've had with parents is around co-signing their children on cards they have so that, the parents' payment history translates to their child. And, when they are of age where they're earning their own income and are looking for kinds of financing, they're already starting off on the best footing available. So if you do have kids, you can try and co-sign them on your credit cards. I think the age cutoffs vary from company to company. Generally, it starts at 16 as the minimum age of the child that you can co-sign on your accounts. And then from then on, the next important thing for you to do is have a pulse on your credit score. There's tons of resources out there like MyMarble where you can log in and have a look at what your score is, have a complete listing of your credit report. Credit reports are not the easiest things to read through. There's a lot of markings and numbers, and it's structured in a very methodical way. We have the resources that will help you understand what each of those numbers mean and what the status of your current financial health is. And there might be some cleanup that you need to do. Credit reporting agencies are not perfect entities. It's not a perfect society. There might be payments that are reported as missed that are not entirely missed. There might be any kind of information on there that needs to be corrected. So you'll need to scan through, have a look at what needs to be changed. And then once you have your bearings ready, the only way to build credit, and this is kind of the catch-22, is to take up more financing, more debt. If you are in prime standing, the best rates are with top tier credit cards with the major banking institutions. An alternative to this, if you want to take a more conservative approach, is to get a secured credit card. What essentially that is, it's like a prepaid credit card where you have to put money into the card before you use it, and you cannot use more than you have put into the card. So this is an excellent way to live within your means and still build your credit scores. And what you want to do is, even once you obtain these kinds of financing, you can get, 2 to 3 cards, maximum secured cards, or even a loan if there's something that you can buy outright, but you can finance and you can afford the payments. That would be a great way to reflect that you can pay off your obligations and build your credit score. And then, at that point, it comes to managing the existing accounts that you have with things like utilization ratio, budgeting your money, looking at what your income is, what can you spend, and making sure that you're making payments in time. There's so many things you can consider. For example, there's a reporting date for each of the credit cards that you have. So the best date to make a payment to reduce the balance in the card before the card companies report that balance to the credit bureaus, because, Scotiabank, RBC, every month they report that data back to TransUnion and Equifax. So knowing what that reporting date on the card is allows you to be in a good position to know when and who to pay. And from then on, it's not an immediate process. It takes time. Like I said, your credit report reflects your behavior across years. It's just about playing the long game, making sure that you're making your savings, paying things off on time. And whenever you're ready to make a big purchase, mortgages, car loans, research, find out what the best rates are. And by that point, you'll have prepared yourself and set yourself for success.
And that was a lot of amazing advice. Since, you've given us so much good advice to improve credit scores, I'd like to ask you, just in terms of general financial health, do you have some tips on how one can go about improving that?
I would say ensure that you have access to your credit report and credit score so you can monitor the changes on there. Get 1 or 2 lines of credit. So that could be an actual line of credit or credit card or a secured credit card. And make sure that your balances on the cards that you do have are not maxed out. So you want to keep it below 35% ideally. You never want to have at full capacity if your credit card limit is $2,000. You want to keep it under that by as much as possible. And here's a great tip. If you can move your payments from your debit cards, use your credit card instead. So pay your gas bills, pay your groceries on your credit cards, and then just simply transfer the money to those cards when it comes down to paying it off.
That's incredible advice. I've never heard of the 35% of your credit limit, because, this is just a personal anecdote, but I pay off my credit cards every month, but generally I would assume I've gone over 35%. So is that bad in all circumstances, even if one is paying off their credit cards every month?
Because of the number of factors that are involved in the credit score, it is difficult to give hard and fast rules. Sometimes you might cross that kind of limit and, you're still doing good. So what I would say is, again, it comes back to the reporting date of the cards that you have and when those cards report to the banks, and making sure that you are sitting as close to that 35% limit as possible. So if the banks, if they have the reporting date on the 15th, you want to make sure that it's paid off with a few days to spare. So by the 13th or so, and then you can bring your balance down to there. If throughout the month your balance has gone to 60, 70, 80%, that's okay. But as long as on the date that gets reported to the credit bureau, that you're sitting within that threshold.
Wow. Okay. Incredible. All right. Well, I've learned so much the past 30, 35 minutes, and I'm sure our viewers will glean a lot from all the valuable information you've shared with us today, Leslie. Thank you so much for your time. I know we've covered a lot of ground, but was there anything that we didn't touch on that you wanted to speak to?
I would just add that, if you want to get started on your financial journey today and, feel inspired to get your basics sorted out, you can visit us at mymarble.ca, or you can simply type Marble Financial on Google, which will take you to our website. And really, our whole game is about setting up your personal finance foundation, savings, budgeting, payments, as you look towards these long-term major purchases like buying a house, and setting yourself up for success then. So if you want to get started, check out our websites. We have tons of information, blog content, free content available for you to start your financial journey today.
Fantastic. Thank you again.
Thanks again for having me today.